Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial mumbo jumbo and find the real story behind the numbers. Today, we're diving into AST SpaceMobile's latest filing, and let's just say they've been busy cooking up some interesting deals. Before we dive in, if you are new here and love getting unbiased insights from corporate documents, make sure you hit that subscribe button. Also, don't forget to join our Discord community, linked in the description below, where we discuss these filings and much more. AST SpaceMobile, Inc. is putting its class of common stock to work, and it looks like they've secured a pretty significant chunk of change through convertible senior notes. They announced the pricing of a private offering of $1 billion of these notes, with an option to buy an additional $150 million. So we're talking about a potential $1.15 billion deal here, which definitely signals some big plans on the horizon. This whole deal revolves around something called convertible senior notes. Think of it like this. The company borrows money, but they also give the lenders the option, under certain conditions, to convert that debt into shares of the company's stock. It's a way to raise capital, now with the hope that if the company does well, those lenders will become shareholders, and the company might not have to pay back all the debt. The specific notes we're looking at are due in 2036, which is quite a long time, and they carry a low interest rate of 2.00% per year. This tells us the company is borrowing money cheaply. The actual agreement governing these notes is called an indenture, and it's between AST SpaceMobile and a trustee, US Bank Trust Company National Association. This indenture lays out all the finely detailed rules about how these notes work, including when and how they can be converted into stock. Now, let's talk about that conversion. Initially, for every $1,000 of notes, a holder can convert it into about 10.38 shares of AST SpaceMobile's class of common stock. This means the initial conversion price is around $96.3 per share. What is interesting is that this price is about 22.5% higher than the stock price on that day, the 21st of October 2025. This is a good sign for the company, indicating that investors are willing to pay a premium for the potential upside of owning the stock, rather than just holding the debt. AST SpaceMobile can't just decide to buy back these notes early whenever it wants. There is a lockout period, and they can't redeem them before January 2029. After that, they can redeem them for cash, but only under specific conditions, including a liquidity condition, and if the stock price has been performing well, specifically reaching 130% of the conversion price for a good chunk of trading days. This protects the note holders from being forced to give up their potential stock conversion too early. This section is crucial for note holders. If a fundamental change happens at the company, which is basically a significant event like a merger or acquisition, the note holders have the right to demand that AST SpaceMobile repurchase their notes at full face value plus any accrued interest. This is a protective measure for investors in case their investment thesis changes due to major corporate events. The indenture also lists out what are called events of default. These are basically triggers that can cause serious problems. For example, if the company fails to pay interest on the notes for 30 days, that is an event of default. Other defaults include failing to convert the notes when required, or if the company or its significant subsidiaries have major debt problems exceeding $50 million. In these situations, the notes can be declared immediately due and payable, meaning the company could have to repay all the money owed much sooner than expected. Of course, bankruptcy or insolvency of the company or its significant subsidiaries are also listed as events of default. In these cases, the entire principal amount of the notes, along with any unpaid interest, automatically becomes due and payable. It is pretty standard stuff, but good to know the company has laid out these possibilities. This part deals with major corporate restructurings, like mergers or selling off almost all the company's assets. The indenture has strict rules here. If AST SpaceMobile wants to do something like this, the new company taking over must be organized in the US and must formally assume all of AST SpaceMobile's obligations under the notes and the indenture. If they don't meet these conditions, the deal might not be allowed. After all the fees and expenses, AST SpaceMobile is expected to have about $981.9 million from this offering. They plan to use this money for general corporate purposes, which sounds a bit vague, but they specifically mention funding the deployment of their satellite constellation and adding new strategic markets for their SpaceMobile service. So, it is all about growing their satellite-based mobile service. This offering was done through a private placement, meaning it wasn't a public offering that everyone could buy into directly. Instead, they sold the notes to initial purchasers, who then resold them to qualified institutional buyers. They relied on certain exemptions from registration under the Securities Act, which is pretty standard for these types of large private deals. They're basically saying they followed the rules for selling these notes without having to go through the full public registration process. When and if these notes are converted into stock, those shares will also be issued in a way that avoids the need for further registration. This is because no commissions or payments are expected to be made to facilitate that conversion. Essentially, they're setting up the process so that converting debt into stock is as smooth and compliant as possible. This filing also references two press releases from the 21st of October 2025. One announces the pricing of these convertible notes, and the other details a concurrent offering where they sold more Class A common stock and also repurchased some of their older convertible notes. This shows that this note offering wasn't happening in isolation, but was part of a broader financing strategy. Now, like most public companies, AST SpaceMobile includes forward-looking statements. These are basically educated guesses about the future based on current information. They warn that actual results could be very different from what they predict due to various risks they've outlined in other filings. They're being transparent about the uncertainties involved. And finally, the filing lists the exhibits, which are essentially the supporting documents for the report. This includes the indenture itself and the form of the notes. These are the legally binding documents that detail all the terms and conditions we've been discussing. So, what is the big picture here? AST SpaceMobile is raising a substantial amount of capital, about $1 billion or more through convertible notes. This funding is clearly aimed at accelerating the growth and deployment of their satellite-based mobile service. The terms of the note suggest they're able to borrow cheaply and are confident in their stock's future performance, as evidenced by the premium conversion price. However, like any company in a capital-intensive industry like space technology, there are inherent risks. The success of this financing hinges on their ability to execute their business plan and deploy their services effectively. The potential for significant dilution if all the notes are converted is something shareholders will want to keep an eye on. Overall, this looks like a strategic move to fuel ambitious growth, betting on the future success of their unique service offering. Alright, that is our deep dive into ST SpaceMobile's latest corporate maneuvers. What do you think about this financing strategy? Does it signal strong future growth, or are there underlying risks we should be more concerned about? Drop your thoughts in the comments below. If you found this breakdown helpful, please hit that like button, it really supports the channel. And if you haven't already, subscribe for more in-depth analyses of corporate filings. Don't forget to join our Discord community for more discussions. Thanks for watching, and we'll see you in the next one.